Do you live in Nigeria or in the UK or in the United States and you want to learn everything you need to know about the ETFs? Get in here. Hi, my name is Tosin Olase and I'm the founder of Money Africa, and welcome to Money Africa's YouTube channel. On this channel, we talk about everything money, how to make it, how to grow it, and how to retain it. So what is an ETF? An ETF is an exchange-traded fund. They say it's a basket of securities, that is stocks, bonds, commodities. But let us bring it home. When I'm thinking of ETF, I'm thinking of a mocktail. I'm thinking of a mocktail that has multiple ingredients in it. So think of this. It has mango, it has pineapple, it has lime, it has fizzy drink, it has all those different ingredients that makes it this new mocktail. And that is how an ETF works. Now, what goes into it? There are multiple of stocks, of commodities, of bonds, just name it, and it's to create this new mix that now becomes the new mocktail. The reason why this is done is for you to diversify your risk. So instead of having just one Google stock, or having just one Walmart stock, or having just one bond, an ETF helps you to compress all those different things into one new mocktail that is now your new drink, and you get to participate in all those different stocks and securities. So it trades on the stock exchange just like any single share. It tracks an index and it is bought and sold throughout the trading day. So although it is a bunch or a mixture of multiple securities, it also trades on the market just as though you were to have only one stock. So you get to enjoy the benefits of multiple securities in one product, in one asset. That's the beautiful thing about the ETF, a fund that tracks multiple things. Now, many times people mix up ETF and mutual fund, but there's a key difference. The key difference between ETF and mutual fund, although they have similarity of people putting their money together and having this fund, the key difference is how it is managed. So let's look at the trading. ETF trades at any time on the stock exchange, mutual fund once per day. ETF is managed passively. That is like the biggest thing that makes the ETF and the mutual fund different. It is managed passively means that there is no fund manager that is sitting on it and choosing, I'm going to do X, I'm going to do Y. So literally, how the ETF works is they've chosen a formula. So for instance, we are going to track 500 of the largest stocks listed in the US market. That is the rule. They choose the formula, they choose the thesis for that fund, and it just runs automatically. There is no physical fund manager making the decisions every day saying, we're going to take out that stock, we're going to do this, we're going to do that. Now, that's the key feature or the key difference between ETF and mutual fund. Now, mutual fund is active or passive, meaning that there could be a fund manager that is making decisions saying that we're going to put this stock, we're going to take this out, we're going to increase this, we're going to do that. Or it could be passive. But for ETF, it is always usually passive. Now, let's look at the average fee. The fee is also very important. ETF is about 0.03% to 0.5%, whereas mutual fund is about 0.5% to 2.5%. This is a big deal. That percentage in the management fee adds up. If you compound an extra 1% or 2% management fee as opposed to paying 0.03% or 0.5% for ETF, it adds up over time. And then minimum for ETF is usually one share, and then for mutual fund, you can then have the amount that is the minimum. So in summary, key difference between a mutual fund and ETF, management style and the fees. The fees is a big deal. That is the crux of that differentiation. So what are the types of ETFs? We have the equity or the stock ETF, meaning that it tracks stocks indices like the S&P 500 we spoke about, that tracks 500 of the largest companies listed in the US, things like the FTSE 100, things like the NGX 30 for those living in Nigeria. NGX 30 tracks 30 of the largest stocks listed on the Nigerian stock market. Vertiva fund tracks that top 30. These are the most popular ETF categories in these different markets. The next one is called the bond ETF. It basically tracks bond indices. It provides steady income with lower risk than equity. So you have examples like the BND for Vanguard, you have the SPTL as well. There's also an infrastructure bond listed on the Nigerian stock market as well that tracks bonds, right? Then you have the commodities ETFs. So they track gold, right? Oil, silver. The most popular one is the SPDR gold. It tracks gold. So if you want to invest in gold and you do not want to buy physical gold, like this physical gold, you can go into the index that tracks gold, that is the SPDR gold. It is the world's largest commodity ETF. Now, the beautiful thing about the commodity ETF, that is especially the gold one, is that it's a great inflation hedge. So whenever there's crisis in the market or there's turbulence, many people usually run towards commodities. Commodities is like a safety, is a place where people usually run to. Now you also have the sector ETF, that is the focus on a sector. My favorite one is called QQQ. It focuses on high growth tech companies, QQQ. If you look at their numbers over the years, it has better numbers than the one that tracks the 500 largest stocks in the US market. You also have the healthcare one, the energy one, higher risk, higher potential reward. Like I said, the QQQ delivered better numbers, but if there's a turbulence in the tech industry, what's going to happen? The returns will be lower than the S&P 500, and that is why even though you're looking at a sectorial ETF, you want to think of other ETFs or other investments to balance it out because of that risk. You also have the thematic ETFs that is chasing things like clean energy, AI, ESG. It's a newer category, is growing rapidly. You have examples like ICL and BOTZ, amongst others, but you get the gist. ETFs have underlying things that they are tracking. Now, what are the ETFs in Nigeria? The famous one, we have the Lotus Halal ETF. It is halal compliant for those that want ethical investing. You want the Vetiver 30 that tracks the 30 top companies listed on the Nigerian Stock Exchange. You have the Vetima Consumer Goods ETF. You have the new gold ETF. So this also tracks commodity, but you're looking at gold. So for anybody that wants to invest in gold but do not want to buy the physical one on the Nigerian Stock Exchange, you go for the new gold ETF. So the next one is top ETFs in the US. The S&P 500, right top of the list, Invesco, Nasdaq. You also have the Vanguard Total Stock Market. So the Vanguard Total Stock Market, unlike of the S&P 500, tracks the entire stock market, right? And then you also have the Vanguard Total Bond Market. I'm going to show you here a graph that basically shows you these top ETFs in the US and how they've performed over the last 10 years. It's your decision to make, looking at the returns. You're also looking at the risk. Which one of these ETFs do I want to plug in? But for new time investors or even average investors, we always recommend getting into ETFs, and then you can then have some individual stocks to accompany it. In the UK, you have the Vanguard S&P 500 UCITS ETFs. You have the Vanguard FTSE All World UCI ETFs. You have the iShares UK Gifts All Stock. The list is here as well for the top ETFs in the UK. Welcome to the world of getting multiple assets in one pie. Get started and start investing in ETFs. Hi, my name is Tosin Olasen. If you enjoyed this, please share with your loved ones, teach them about ETFs, how it works, and the key differentiation between ETFs and mutual funds.